See, speaking of real estate investing, and by the way, you should check out the new website. You can go to retirementplannow.com to check it out. It'll route you to the new site. And you've got a whole, and we've talked about real estate from time to time, but you got a whole section on your website about real estate investing. Yeah, we do. And there's a lot of people are asking about these, and we built a bunch of pages actually under our main page. You know, if you're just on the radio, listen to us. retirementplannow.com goes into a page where you can get more information about it. But if you go to financialplanningva.com, that's a page that has a lot of different information about our, what we do and how we do it. But it has alternative investments as an asset strategy. And basically, passive real estate is a great way for people to exit out of a real estate portfolio that they've had for many years. A lot of investors get to a point in a stage in life, physically and even mentally sometimes, they can't handle the headache of being a landlord. Have you ever rented real estate? No, I haven't, but I'm interested in passive income. I just don't know that there's anything truly passive. It's funny that it's called passive income if you actually own real estate and you're managing it yourself, because there's nothing passive. It's a lot of work, isn't it? It is. It's such a joke that they called it. Well, the IRS considers that passive losses and passive income, but it's not passive, the actual work of it. Yeah. But what we're saying here, passive real estate, it really is passive because collect a check every month. Yeah, you're not the landlord. You're not going to go fix the toilet, change the water heater here. It's called a Delaware Statutory Trust. That's what the DST is, because I see that on there. Right. Delaware Statutory Trust, or DST, are owners of real estate that sell their investment real estate. Let's say you had an apartment building, or maybe you had 50 rentals that you were single family homes, or 10 or 20, whatever it may be. And the big thing people are concerned about selling is like, oh, I'm going to pay all the tax and I don't know how I'm going to get out of this. Well, DST, I probably have told, I don't know, a dozen people that have been in real estate in the last few months. And they're like, what is it called again? I'm like, you've been in real estate for how many years? It's just not something. I only know it because I hear you talking about it on the radio. Right. And it's basically, DSTs are a legal entity formed as a private governing agreement for managing it, right? You're not managing it anymore. You're not administering anymore, but you can still invest in it, right? And you can still you're still getting your interest in real property, right? You actually do. You own it. I'm just trying to wrap my head around this. Yeah. You own it. You want to get out. Yeah. And have the passive. So somebody else is managing it. Right. That's it. And it could be, and it's in a lot of ways, it can be lower risk because, think about it. You're in one geographic location in Roanoke, Virginia, Lynchburg, Virginia, or Blacksburg, right? It could be, let's say, in Lynchburg, Liberty just has some financial problems and the town starts going downhill, right? The rest of the country's doing great, but that little town just kind of starts falling apart. Well, if that area falls apart, real estate falls apart. Right. And so DST, you could be in 20 different properties, right? You could be spread out through all kinds of different properties and you're not managing them. So you're diversified in Tampa, Florida. And this helps you with your taxes? Well, it does, because you do what's called a 1031 exchange. Oh, I've heard you talk about that. Yeah. So the 1031 exchange is a way to you sell the property and then it goes directly into a 1031. Well, not directly. It's going to a 1031 exchange. You have 45 days to identify other properties that you want to go into, and the DST can be one of those properties. Right? Gotcha. So then at that point, so you go from, you sold your apartment building for $3 million. Let's use an example. Okay. Right. You 1031 it to another company. They're a qualified intermediary. They are the ones that hold the money. Yeah. They just put it in a checking account, barely give any interest, but it's safe. It sits there. And then it goes into another real estate property, but you're not managing it. Okay. Okay. And then at that point, you're going to get income, pass it on tax-free to the kids when you pass away. Gotcha. So let's say you had a $3 million property and the client paid $1 million for it. Well, it's depreciated. His cost basis might be $300,000 for the property. You get $2.7 million in gain. You're gonna pay $700,000 in tax. Oh my gosh, yes. So why wouldn't you just defer it? You still want the income. Let's get a 4% yield, right? In dividends. Maybe it'd be higher, more aggressive you are, obviously. People are like, well, I can get 8% in real estate. Yeah, you can. It's just you're taking a little more risk. You can get more conservative portfolio and get 4 or 5. But the idea is you're deferring the tax.
By that point, you should be good with 4 or 5, I would think.
Right. If you get that kind of money, it's 120 grand in income plus Social Security. So how much do you need?
Right.
Right. And so a DST is just a way to still be invested, still get income, still build wealth, but pass it on tax-free as well.
Delaware Statutory Trust. Did I say it right?
Yeah, sort of.
Don't rely on me to say it right.
Yeah, just say DS.
We'll let Brian deal with it. So if you have saved at least $1 million towards your retirement, call the team at Integrity Financial Planning. Private Wealth Division, if you have $5 million or more saved towards your retirement, that qualifies you for the team, for the Private Wealth Division team. All you have to do is make the call. 866-2-PLAN-4, 866-TO-PLAN and the number 4. And by the way, that's a complimentary blueprint plan for those of you who have saved like that. Or you can go to retirementplannow.com. That's retirementplannow.com and go check out our new website.